Welcome everyone to today's lesson on the fascinating journey of money throughout history. Have you ever wondered how we transitioned from trading cows to crops to now just swiping a card at the store? In this video, we'll explore the evolution of money, covering everything from bartering to cryptocurrencies. So without further ado, let's dive in. So let's start with the very first form of trade, which is bartering. This system allowed people to exchange goods and services directly. So imagine you're a farmer wanting shoes. One day you wake up, you're like, man, I'm tired of walking these fields, getting my feet scraped. I need some shoes. So then you go find someone who has shoes, or a shoemaker who needs something that you have to offer. So you're a farmer, so it's something like wheat. So you could strike a deal. However, bartering has its challenges. For instance, both parties must want what the other one has, and this is known as the double coincidence of wants. So as we can see here, we got this little farmer dude, he has a cow, he's like, man, I've been craving some dang bread. And then this little bread maker is like, man, I've been craving a dang cow. And so they meet up one day, like, I'll trade you this cow for this bread, super easy, bam, bam, trade, bartering, awesome. I still recommend doing this in today's world. This is still a fun form of like changing goods or services. It's super fun, and this should still be acquired today. So to further go off of the old system of bartering, people wanted to address the limitations of such things, and societies began using commodity money, items with intrinsic value. So for example, gold and silver were highly sought after just due to their rarity and utility, and this transition made trading easier and more efficient as goods no longer had to be directly exchanged. Even ancient Lydians are credited with minting the first coins around 600 BC, which standardized currency and paved the way for modern economies. So again, to break this down in a more visual aspect, we could just take this and go like, man, extend it out to what all this can be due to. Great. Do like, what's another commodity? Coal. Got gold. Alcohol. And then what else we got here? Oh, like tobacco. So man, these can all be standardized to the gold coin. So it just makes, instead of just trading all these things, they spam, little coin, and then today's world becomes a card. Tobacco. So as trade expanded, commodity money began to evolve into fiat money. Currency that has value because the government maintains it, not because it is backed by a physical commodity anymore. The first paper currency appeared in China during the Tang Dynasty. And by the time the US dollar was created, it was no longer being tied and backed by gold and silver. This shift allowed governments to control the money and stabilize the economies, so we thought, because it is direct correlation into the challenges like inflation that we are experiencing today. So again, the government issued currency that is not backed by a physical commodity such as gold or silver, but rather by the government. So they're just being like, oh, we got you back. Just trust us. Here's this. We got you back. You don't need to rely on something with intrinsic value like gold or silver. No, just trust us. With fiat money in circulation, banking systems emerged to facilitate transactions. Banks began as places to store and lend money, but then quickly evolved into powerful financial institutions. Through fractional reserve banking, banks only keep a portion of deposits on hand, lending the rest out. This process creates new money and stimulates economic growth, but it can also lead to the risks like bank runs during financial crises, as we have seen many times over. So basically, you go into a bank, and then you give them like, I don't know, $100. You're really only having $10 in the account. Well, they lend out the rest of the 90%. And then when you need to withdraw money, they just take other people's money and put it into your account. It's just numbers on a screen, really. What we think we have, we don't. So it's just a whole facade here that we need to be more open to. Again, I'll go more into this later, but as of right now, it's just basic understanding. Alright, now let's fast forward into the 21st century, where technology has revolutionized the concept of money once again. Digital currencies and cryptocurrencies like Bitcoin have emerged as decentralized alternatives to traditional banking systems. These digital currencies offer unique benefits such as lower transaction fees increased privacy, but they also come with the risk and regulatory challenges. As we look into the future, we might see central bank digital currencies becoming mainstream, potentially reshaping how we view money entirely. So with Bitcoin has a lot of positive negatives, more so we're leaning on the positive side. As we can see, decentralized, biggest thing. We need to start implementing the seeds and the roots to move away from the banking institutions as they are now. Because as we've been seeing, they're not really working to our best benefit. This is way better than what we have going on already. And again, lower fees, and like I just mentioned, this can possibly be the future of money. I say can, it's already paving its way as it is looking as such, but again, new things could come out. We don't know. This is relatively new. This is just coming in our lifetimes. So something else could come, we don't know, but as of right now, this is our best bet in getting out of these terrible, terrible institutions that are just leading to a global demise and individual demise as well. So to give a little recap, today we've traced the fascinating evolution of money, from bartering to digital currencies. Understanding this journey helps us grasp the complexities of our financial systems today. So, what do you think the future money looks like? I'm genuinely curious, so please share your thoughts in the comments below. I want to know. I want to know what other minds are thinking for the future of money, because I know a lot of people have their mind dead set on one way and other people have the other. So I'd like to know. Please leave a comment down below. And again, like, subscribe, don't need none of that. I need you to create a folder, save it in it, and come back to it until you can understand these concepts. That's the only thing that's truly important to me. So please, again, take in this information so that we can create the fundamentals and the steps to go on to broader and more complex topics. And thank you for watching, especially if you made it to the end of this video. I really appreciate that. Have a wonderful rest of your day.